For years, all eyes have been on Deutsche Bank and its massive transformation. Well, the 2025 report card is officially in. So we're going to break down the final grades, see exactly how they pulled off this incredible comeback, and most importantly, figure out what's next for one of Europe's biggest banks. Let's dive in.
All right, here's our game plan. First, we'll hit those big, flashy, record-breaking numbers. Then, we'll get into the secret sauce, their global Hausbank strategy. After that, we're taking a look under the hood at their main business engines. We'll see how all this success actually benefits shareholders. And then we'll wrap up by looking at what's on the horizon for this German banking giant.
So let's get right to it. What's the final grade? The short answer? They absolutely aced it. Deutsche Bank officially hit all of its major 2025 financial targets. That's a huge milestone after this multi-year restructuring. Let's break down the key results.
First up, let's talk profit. We're looking at a record 9.7 billion euros before tax. And look, this isn't just a small increase. We're talking about a massive 84% jump from the year before. It's a classic example of what they call operating leverage, where your profits just explode, growing way faster than your revenues.
Next up is a really crucial metric for any bank called return on tangible equity, or ROTE for short. They hit 10.3%. Now, why does that matter? Because it clears their long-held goal of 10%. In simple terms, this means the business is finally making more money than its own money costs to operate. That's a huge sign of sustainable profitability.
And what about the top line? Revenue? Well, they nailed their ambitious target of 32 billion euros. This wasn't a one-off either. It represents a really solid 6% compound annual growth rate since 2021. That proves they're not just a cost-cutting story. They can actually grow the business year after year.
So when you look at the whole picture, the takeaway is clear. This report card is basically all A's. Net profit more than doubled. Doubled! They hit their cost target, showing incredible discipline. And with a capital ratio of over 14%, well, their foundation is absolutely rock solid for whatever comes next.
Okay, so the numbers are fantastic, but how? How did they actually pull this off? What was the playbook? Let's dig into the core strategy that really powered these results.
At the very heart of everything is this idea of the global Hausbank. Now, Hausbank is a German word that basically means your main, go-to, trusted bank. So the whole strategy is to be that indispensable global partner for their clients. It's about leveraging their diverse business mix and those deep, long-standing relationships. It's not just about providing a service, it's about being a core, trusted partner.
And looking ahead, to scale this success, they're really leaning on a three-part plan. First, laser-focused growth in very specific areas. Second, super strict capital discipline to squeeze out better returns. And third, building a scalable operating model so they can grow efficiently without costs ballooning.
All right, so that's the strategy on paper, but let's see how it actually played out in the real world. We're going to pop the hood now and take a look at the four main business divisions, because all of them saw some pretty significant improvement. They are all, you could say, firing on all cylinders.
And right away, you can see the power of their diversified model. Yeah, the investment bank is the biggest revenue generator, but look how close the private and corporate banks are. This balance is absolutely key. It gives them stability. So they're not just riding the roller coaster of one single division's performance.
The corporate bank's journey is just a perfect example of this whole transformation. Just look at the story these numbers tell. Back in 2021, it was costing them 88 cents to make a single euro. Fast forward to 2025, and that's down to just 62 cents. This massive operational overhaul sent their returns skyrocketing, from a pretty sluggish 4% all the way up to an impressive 15%.
Now, the investment bank. This is the division that people often think of as being super volatile, right? Well, it's really transformed into a much more stable engine. By focusing on what they do best, they actually gained market share, boosted client activity by 11% just last year, and, as you can see, became way more efficient and profitable.
Okay, but the private bank's turnaround. This might be the most remarkable story of all. Think about it. This was a business that was actually losing money. And now, it's a powerful, profitable magnet for new client money. We're talking a massive 110 billion euros in new assets that completely flipped its performance from a negative return to a really solid 10%.
And finally, their asset management arm, DWS. It just continued to be a total pillar of strength. It's always been highly profitable and efficient, but in 2025, it officially crossed a huge milestone, over 1 trillion euros in assets under management. Just incredible.
So, a successful corporate turnaround is fantastic, but let's ask the big question. What does it actually mean for investors? Let's take a look at how the bank is translating these strong results into direct value for its shareholders.
Well, as you'd expect, as profits have grown, so has the amount of cash being returned to shareholders. The bank has been steadily ramping up its distributions. For 2025, they're proposing a pretty hefty 2.9 billion euros through a mix of dividends and share buybacks.
This brings the grand total return to shareholders since 2021 to a massive 8.5 billion euros. And that's not just them hitting a target, that's them blowing past their original goal. It sends a really powerful message about their commitment to shareholder returns.
Okay, so the turnaround chapter is officially closed. The 2025 report card is in, and it's fantastic. But, the story isn't over, not by a long shot. So let's look at what's next, including their future targets and, just as importantly, the potential risks on the horizon.
Now, while the outlook is really strong, you have to give them credit, the report is very balanced. It doesn't just ignore reality. Management is very clear in acknowledging some potential headwinds that could definitely pose some challenges in the near future.
So they're keeping a very close eye on a few things, especially the challenges in commercial real estate. But at the same time, they're getting ready to invest and invest heavily to fuel that next phase of growth. Now, what does that mean? It means costs are set to rise in the short term. But think of it as a strategic spending increase, one that's designed to pay off big time down the road.
But there is absolutely no mistaking their ambition. As CEO Christian Sewing puts it, this next phase isn't just about growth. It's a full-on quest to become the European champion in banking. I mean, what a bold statement. It perfectly sets the stage for the next chapter. So it leaves us with one final provocative thought. Having pulled off one absolutely monumental turnaround, can they now execute on this even grander vision?